All right, boys, here we go. Welcome back to the Tomorrow Podcast. With me, as always, Donnie McGinnis. I'm Kevin Robinson. We got the King of Kings here in the tax world. We got Paul Olsen with us. Paul, you are owner, partner at Welch Olsen. What's the last name of it? Or how is it pronounced?
Welch Olsen. Yep.
Welch Olsen.
My partner's Daniel Welch. Obviously, I'm the Olsen in that.
That's
So
correct.
why didn't it go Olsen Welch?
That's a good question.
That was actually my first question, dude. I wanted to understand how that happened.
Olsen should always be first.
It doesn't seem right.
It doesn't seem
It
right.
doesn't seem right. You guys should
You
talk
know,
about it.
he's older than me. He's
Okay.
got a year or two in school on me, so
He got it. Yeah, okay. Well, that paying him his respect.
yeah, I'm okay with the pecking order.
Hey, I was just going to say, things change, Paul. Things change.
Yeah.
All right, hey, check it out. This is special. What we want to do, and the reason we have you on today, Paul, man of many talents, but in our industry and in other industries similar, door-to-door and others out there, you get a lot of guys that are 1099 independent contractors. A lot of guys that come into our industry that don't understand what it means to be a 1099 independent contractor. So the objective of this
They
show...
just think it's more money.
Yeah, you
Yeah,
get
no
your
doubt.
money up front.
Yeah.
The objective of the show is simple. Want to create an outline or a roadmap on how to keep your money and how to best do that in our industry and in others like it. So, first of all, let's talk about some pitfalls, right? So you got a guy who comes into the industry, gets marked with a 1099, has absolutely no idea how to save his money or how to, even the idea that he has to save his money. Talk to us about some of the pitfalls you've seen with first-year guys.
Yeah, good question. So a little bit of my background, I come from the door-to-door space, and so when I was knocking and also going through school studying tax, that was kind of my number one thing. All right, how can I keep as much money in my pocket as possible?
Or take back from the IRS.
Take back from the IRS, exactly. Number one pitfall that I see most of the time, usually a first-year guy has to get stung once until they realize, oh, okay, there's a handful of things that I should be doing. One of the biggest things I would say is you get this new job, you're a 1099 contractor, and you fail to set up an LLC and have it be taxed as an S corporation year one. I see that all of the time. It only takes 1 year for a guy to pay $10,000 more in tax than he needed to realize, yeah, I better get my my stuff together.
Dude, so I remember it was a couple years ago, or maybe I guess not more than a couple. It was probably 6 or 7 years ago.
You're old now.
You came to me with this very thing. You said, "Yo, how are you being taxed in the industry?" And set up with an S corp. I think that day, super valuable because I also had been getting stung for years and years and years by the IRS, just paying too much money, and so a ton goes into that. Paul, let's unpack that. So for first-year guys or anybody that's been in the industry for a long time that hasn't done this, what are the first steps on getting taxed properly as a 1099?
Yeah. So I always tell clients of mine, if you're making over $40,000 profit, so revenue minus expenses, if that's more than $40,000, you need to be taxed as an S corporation. An S corporation is simply an LLC that you've set up. You've filed a form with the IRS, Form 2553, and you've elected for that LLC to be taxed as an S corporation. The reason that's important is if you're a 1099 and your 1099 is just coming in your personal name, you're subject to 100% self-employment tax, which is 15.3%. 15.3%.
Ton.
It's a ton, right? When you're an S corporation, you can eliminate a large majority of that 15.3% tax. And the way you do that is you set up that LLC, make the election to have it be taxed as an S corporation, and then if you're earning $100,000, say, with an S corporation, maybe you're only paying about $4,000 in self-employment tax. If you don't have that S corp in place on $100,000, that's $15,300, and just in self-employment tax. We're not even talking income tax. Just in self-employment tax that you're going to be paying, and that's not just buzz. That's the truth. I see it all the time.
Yeah.
So, Paul, tell me this. What if you're new to door-to-door and you don't know if you're going to make $40,000, right? Do you take the risk and not set that up, or do you just set that all up hoping, you always want to think big picture, like I'm going to make tons of money. But what would you say to someone in that situation?
Yeah, when I'm having that conversation with a client, usually it's, hey, how long do you plan to do this? If this is a one and done, then I forget about it. It's not worth the compliance, the admin to keep things going. If you're going to be here for a while and you believe in yourself just a little bit, set up the S corporation. That's typically what I'll say. And some people want to wait for a while. I don't know if I'm going to be there, if I'm not, and that's fine to wait a little bit. But $40,000 is kind of that mark, and it's up to you to determine, hey, yeah, I'm going to hit that. I've got the confidence I'm going to be there. And if you don't hit that, it's not like it hurts you. It's just not as much of the tax savings. The $40,000 is where it kind of tips.
Yeah, so I think it's a great question, Donnie, and I do think there's a lot of first-year guys right now that are thinking, okay, is this going to be worth for me? My answer would be, why would you bet it the other way?
Don't bet against yourself.
If you pop above 40.
I think what happens though with some of these guys, well, what I've kind of seen is probably like, well, I just don't want to spend that much money to. It's not that much money to set it up because I have it myself, but like they don't want to go through. They're already struggling with money, so they don't want to go through spending that money to set it up. But then they make the money, and then they get hit hard. So then it's like going backwards, anyways, because they end up owing all that money.
And that's why I say they get stung.
Just set it up. You know what I mean?
They get stung one year, and then they're like, oh, okay.
Yeah,
that makes sense.
Yeah.
Paul, how much does it cost to set it up? So look, let's do this out. Let's break it down. So I'm gonna act as a first-year rep. Okay. I'm going to go in and talk to my accountant, or I'm going to hit up Welch Olsen, and because I know these guys have been around the block. In fact,
Olsen Welch.
Olsen Welch.
I'm kidding.
No, we'd never do that, man.
Olsen.
Actually,
my partners are going to hate you.
I was going to say, no, actually, I mean, you guys have a phenomenal thing. You've spent a lot of time, specifically in our industry, saving people money. And so we'll make sure that, Paul, you've got a tag, and we'll make sure the guys can hit you up because you guys are the best at it. You know how to keep guys keeping their money. But I'm a first-year dude. I'm going to come in. I'm going to talk to you. You're going to set up an LLC, and we're going to elect to go and be taxed as an S corp, right?
Yep.
Once I've got these things in line, how am I saving my money? What am I able to write off at that point? So I should be looking for what throughout the course of my year?
Yeah, good question. So once you've got your we'll call it your corporate structure in place. You've got your S corp set up. Okay. The next thing is you're actually going to go set up a bank account for that S corporation. You're not going to use your personal bank account. You do not want to mix funds. That's called commingling of funds or piercing the corporate veil. The IRS does not like that. So you're going to go set up a separate bank account for that S corporation. All of your income is going to go into that S corp bank account. All of your expenses are going to come out of that S corp bank account, or if you've got a credit card tied to it. Now, what are those expenses that can be write-offs is kind of the question, right? So say you've got a vehicle. We're going to look at that vehicle and say, all right, we're either going to take depreciation on this or we're going to take mileage. If you've got a little Honda Civic that you're driving across the nation all over the place and you're driving tons of miles and it's a $18,000 car, we're taking mileage 10 times out of 10, right? If you've got a super expensive car, over 6,000 pounds maybe, right? $80,000. You're not driving a ton. Well, we're going to elect to take depreciation on that to maximize the tax deduction because you're not going to catch up with the mileage deduction. So one is vehicles and depreciation. Okay, that's a big one. That can alter the amount of tax you're going to pay significantly. Other things along the way are your meals, recruiting, all of those. If you own your home, renting your home to your business. The Augusta rule is a big one that people miss all the time. It's rent expense for your business. It's like the one place in the IRS code or the Internal Revenue Code where they say, hey, don't tell us about the income that you're making, and you can get it tax-free. You're simply having your business pay you personally to rent out your home to the business to hold board meetings.
Which is significant, right? And,
huge.
And did you mention that came about when the Olympics were held here? Is that kind of when that rule was created, or how did that happen?
Yeah, so it's not the Olympics. It's actually the PGA Tour, Augusta National.
Got it.
Come on, Kev.
Yeah, where am I at? Dude,
Augusta,
with my deepness and tax knowledge, I can't believe I missed that.
Yeah.
So
there was a housing shortage for the tournament.
Okay.
And that rule, the Augusta rule, came out of the PGA Tour. Essentially, they allowed homeowners around the Augusta National Golf Course to rent their home to visitors that were there for the tour. and they didn't have to consider it income to them as long as they rented their house out for less than 14 days a year. So we take that, put a door-to-door spin on it, and say, hey, we need to hold board meetings
Yes.
in our home.
Yes.
To operate our business. Of course you do, right?
100%.
Well, who's on my board? My board's me and my wife. Do we
Yep.
talk business? All the time.
1,000%.
Right?
Yep.
So I keep
In
notes
your sleep.
of our board meeting in our sleep. Yeah, exactly. And I've got that ready. And then I just have a paper trail of cash going from my business bank account to my personal bank account every single month. I write it off as rent expense. I don't have to capture it as taxable income on my personal side. And it's a recurring transaction every single month.
And so when you factor in things, again, we're going to keep going through the list because I think guys want to hear about this. And in specific, let me just do a recap again. You're an LLC. You're being taxed as an S corp. That's what you elect to. And we're then going through getting your own bank account, making sure that it's separate from your personal account. That is crucial. You don't want to intermingle these accounts with personal and business. And then we're moving along to some of these things that are real money savers. One being your vehicle. You mentioned rent expense for your home, which you were just talking about, which can add up and be significant. If you're looking at the tab of what you mentioned, $100,000 in earnings, when you're taking into consideration that you can use a tax write-off once a month to rent out your home for your business, your vehicle expense, and we'll continue to go through it. This is now adding up to become significant and getting away from a major tax penalty. So let's keep going down through the list.
Yeah, and those are the huge advantages of being self-employed, being a 1099 employee. Yes, there's the additional cost of, hey, I've got to file additional tax returns, I've got to set up an S corporation. But a bunch of these expenses that are typically maybe personal expenses that you would never get to write off if you were a W-2 employee.
Yeah.
Well, you get to write all those off now. So you talk about your phone. Everyone's got a phone.
For sure.
Everyone's paying for a phone.
Yep.
If you're W-2, you don't get a tax deduction for paying for your phone. Well, if you're self-employed, you're 1099, you've got to have that phone.
100%.
Right? You're making sales, you're on calls. So all of a sudden you're deducting your phone every single month. Well, what about the internet that you're paying for? You're
great
not
point.
deducting that if you're a W-2 employee. Okay, now we're deducting all of our internet expenses. Even if it is in your home, you're taking a portion of that for business. I'm sure everyone's used their home internet for business.
1,000%.
Right? At
Yep.
some point. So you're looking at stuff like that. A little bit of the deeper, bigger things is if you've got children, putting your kids on payroll. My kids don't get an allowance. They're on payroll for my company.
Wow.
And those are
Could I be on payroll for?
You adopt a couple kids here, Paul.
Go home, talk business with your wife, and see. Hey, we're gonna put Donnie on.
I
payroll.
will say you have to be under the age of 17 for that to work. So
Okay.
if you were
Hey,
under
I
17, Donnie, I'd put you on
You want me to
Baby
Photoshop
face
a birth
on 'em.
certificate? I'll Photoshop. A birth
Nobody
certificate.
actually knows how old Donnie is. He could be
Yeah.
anywhere from 24 to 37.
So even like my younger kids, it's hey, go vacuum the office, go clean out the company car, go take trash out. For my younger ones, I use a lot of them on marketing stuff.
Yeah.
If I go do a presentation, I'm throwing up slides. You better believe I've got pictures of my little boys.
Love.
Right? They're out there marketing for my company, teaching tax strategies. So find how that works. Be reasonable, obviously, but find how that works in your industry and go use it, right?
Because you can't lie. You have to do that.
Yeah,
Obviously.
they've got to have responsibilities
Of
you've,
some
You've
sort.
got to pay them. They've got to have their own bank accounts. It's not just, let's just make this up, right? We're doing it right. But if you take the time with anything, if you take the time to vet it out, set up the system, set up the processes, I mean, it's a $60,000 deduction for me every single year.
That's
Hey, you're. I need to get on his.
I was
payroll.
going to say
Holy
that's
smokes.
significant. That's significant. And also, I guess that we'll be in the wrong. I'm going to start doing I would be an accountant now.
I know.
All right, Paul, here's a question, because as I'm hearing you say this, all of this is relevant. I want to break it even more into the mindset of a rep. I'm just thinking about, some of the reps that I work with and some of the people that I know in the industry. A lot of these guys are traveling.
Yeah.
They're buying flights all the time. They're staying in hotels all the time. You'd mentioned food and, essentially a per diem, right? That's kind of where I'm at. It's expensive to go out and make that money. I would imagine flights play a significant role in this. Your housing when you're out there, even your gas to an extent when you're out there. Am I right? So talk to me about all of those things.
All of those, absolutely. So a lot of guys will go get a rental car,
Yep.
right, when they show up. You've got a flight, and then you've got a rental car. those are business deductions. Those are tax deductions. You should be tracking those. You should be using your business bank account when you're swiping that. You talked about per diem. Per diem is huge for the door-to-door industry. It's essentially what it is. If we get a little bit granular, it's a meals and incidentals per diem. Depending on where you're at in the nation, it can vary a little bit, but we'll say roughly $58 to $60 per day. So rather than deducting your meals and whatever incidentals you have, which usually aren't a lot, you're taking a per diem instead for every day that you're out of state working. Well, it's not, maybe some days you're spending more than $60 a day, but not every single day are you spending $60 on a meal, right? So that meals and incidentals adds up, because sometimes people are gone 6-7 months in the year.
Sure.
Right?
Absolutely.
So $60 a day can add up quite
Significant.
a bit. Yeah, significant. You even get as granular as you can deduct uniforms, right? Do you have a uniform that you use when you're knocking, when you're working? Are there shoes that, hey, these are my knocking shoes, or the shirts, whatever? There's a portion of clothing that you can deduct as uniforms. So a lot of it, I kind of bring it back to like, hey, stuff that you would have spent money on anyways.
Yep.
Just know, hey, this is now a business deduction, right? It is like every American's responsibility to understand as much as possible about the Internal Revenue Code. It's a big, thick book that says, hey, if you don't want to pay tax, study this book or hook up with someone that knows it. And here's all the loopholes available to you. If you take the time to study through that, great. If you don't, then just pay a little extra tax. And me personally, I want to pay my tax. I want to, keep the laws of the land, but I'm not looking to give Uncle Sam a tip.
Look, I was just gonna say it, man, because Uncle Sam, he'll put his hand down your shirt and rip your chest hairs out, man. You know what I mean?
Exactly.
Hey, so it's a thing though, right? There are certain advantages. People don't look at it that way. I was one of them. It's almost down, and this is, not exactly there, but it's almost down to the air that you breathe. Everything that you're doing, for the most part, if you're 1099, is towards your welfare, right? Like, it's towards your business. It's how you make money. The car that you drive, the house that you sleep in, can be used as a business expense. The meals, the travel, the flights, all of it. All too often, Paul, we don't look at it this way. And I know that there are a ton of people listening right now that are thinking, I'm doing none of this. and they're also starting to get a little swirl in their stomach thinking, holy crap, I'm going to pay taxes here in a few months, and none of this is set up. So here's my question. Right now it's 2024.
Yeah.
And we are 6-7 months into the year. Can I set up an LLC and an S Corp today for the year 2024? Can I be taxed right now this year? Is it too late to start right now? Because I've got guys that are halfway through the summer. Everybody has guys that are halfway through the summer, whether they're door-to-door or not. Independent contractors are halfway through their year.
Yeah.
Is it too late?
That's a great question. And no, it is not too late. You can
Awesome.
go set up an LLC right now and start flowing all of your income, all of your expenses through that LLC. Go tell your employer, hey, I've got this LLC now. I want my 1099 to come in the name of the LLC. And then you've got your revenue in the LLC. And you start tracking. Wherever you're at, start now. There's no value in waiting. You look at, if you look at like the tax rates, the income tax rates, if you're making $300,000 a year in the U.S., your tax rate is 32%. That's a third of the year
Working for free.
that you've worked on behalf of the government.
It's crazy.
Right?
It's crazy to think about it like that.
So when you consider like, is it too late? Should I just wait? Well, the government's not waiting for you.
No. They're hoping that you wait a little longer.
Yeah. They say, just
do it
wait till
next year.
2025.
Do it next year.
It's incredible because I'm thinking to myself, it's a daunting task, but if you're in the middle of your summer, and it's not a daunting task, you can get up with your CPA, get up with Welch Olsen. These guys will set you up in a heartbeat. Probably don't even have to meet up in person, right? You just get a little phone call going on,
true.
exchange some information. But that's where you want to live. It's not something to be delayed, regardless of where you are in the year. So Paul, let's do again. I don't want to be redundant, but sometimes these things need said 3, 4, 5, 6 times before they sink in until people actually take action. So let's make sure that they understand the recipe again. Yeah. So we're looking at an LLC. You're being taxed as an S corp. That's what your election is. You're creating a bank account that's separate from your personal account so that your money can flow there. Yep. At that point, you're looking at your write-offs. You're going through everything from where you live to what you drive to what you eat to how you travel, anything and everything, and get up and talk about that with your CPA as to what can be taxed. In fact, they have a form that they send out every single year that goes through a million different things that you should be looking at. I love that form because that helps me. It's my roadmap, man. That way I don't get lost.
That's right.
Outside of that, where are we? What other?
I actually have a thing for you.
Yeah.
Because I remember when I set up mine back in the day, I was kind of confused. I'm like, okay, so if I set up my business checking account, can I just move that money into my personal and that's okay? Or do I need to set up payroll? And
it's a great question.
Well, do you set up payroll? Do you pay yourself? Like, what do you do, right? If you want to just kind of dive through that a little bit.
That's a great question. I actually get that question all the time. Can I touch the money in my business bank account? How do I transfer it? All right, I've got to go buy groceries. Clearly not a business expense. How do I get that money over into my personal account? So when you're operating as an S corporation, there's 2 ways to take money out of your business. One, you can take it through a W-2 payroll. In fact, you're required by law
For an S corp
to pay yourself a reasonable salary. So if you're making $100,000, I'd probably tell a client, hey, pay yourself $35,000 a year in W-2 payroll. That W-2 payroll is subject to that 15.3% self-employment tax. But the spread, the remaining $70,000, is not subject to that self-employment tax. So that's where the significant tax savings is there.
That's huge. That's where you win.
Exactly. But so you're killing 2 birds with 1 stone. Like, hey, yeah, I'm transferring funds from my business account to my personal account. I'm checking the box because I'm obeying the law of paying myself a reasonable salary. The second way to get that remaining $70,000 into your personal account, if you wanted to, is through an owner's draw, which is simply a transfer from your business bank account to your personal bank account. Exactly. So the 2 ways you get that money into your personal account to go spend it is through a W-2 payroll and an owner's draw. You'll hear people also say distribution sometimes as well. But that's how you're transferring those funds into your personal bank account. So if you're going to go, you talk about next steps. Okay, so what if that money's piling up in your business account or whatever, and you want to go make an investment? Hey, I'm going to go buy a rental property. I'm going to invest in this. Well, you're going to transfer funds from your S corporation to your personal bank account, right? And then go buy that rental property. And maybe that rental property is sitting inside of an LLC or something, and that maybe that's a conversation for another day.
Yep.
But that's the flow of money and how that works. And beyond that, like for those in the door-to-door industry, one thing that I see a ton of is, all right, money's starting to pile up. What are my next steps?
Yeah.
Well, a lot of guys, gals are going to real estate. And why do they go to the real estate? Real estate is a huge tax deduction. And we don't have to jump too far into it, but
let's do that because Paul, you're hitting the nail on the head, man. That is very relevant for our industry. In fact, most of the guys that we deal with, that is where we are encouraging them to put their money.
Okay.
For the reasons that you are talking about right now. So let's break that out. So we've got the understanding of now how we're going to be taxed. We understand how to go and facilitate that and kind of what to look for your tax savings. But now money's starting to pile up, right? Significant saving equals big bank accounts. So let's talk about real estate, and we can kind of stay there for a second.
Yeah.
Let's live there for a minute.
Yeah. Okay. One of the reasons I love real estate is there's a couple ways to kind of save for your retirement, if you will. If you're a 1099 contractor, ain't no one preparing for your retirement but yourself. Right.
Yep.
There's, you could go set up a solo 401k, which I'm not opposed to, but tax rates are only going to go up. So those 401ks,
because they take from that.
Yeah. Well, you're getting a tax deduction now, but then when you pull it out, you have to pay tax on it.
So
if you're at a lower tax bracket right now, and it's probably only going to go up,
right?
That doesn't make a lot of sense to me.
That's hard.
Right?
Yep.
So that's where you see a lot of guys going towards real estate. Okay. Why real estate? The reason real estate is so valuable, and it's not only tax, but I'll talk about the tax aspects, and I'll talk about a little bit the economic aspects of real estate. So when you go buy real estate, you're buying property. There's only so much land on earth, right? Typically, historically, real estate has gone up in value. Yes, there's dips here and there, but over time, real estate has gone up. The fact that the IRS allows you to depreciate, meaning take a tax deduction for the purchase of real estate. So on your tax return, you're actually showing that you're probably losing money on the property. You've got, your mortgage interest, your real estate property taxes, HOA fees, repairs, maintenance,
Wear and tear. Yeah, sure.
and then a massive depreciation expense every single year. Well, you've got your rental income minus all these expenses. For tax purposes, you're losing
You're
money.
at a loss.
You're at a loss. You're at
Yes.
a tax loss, meaning you're paying less in tax. But in reality, economically, what's happening? Most likely, the value of your real estate
Going up.
is going up.
And rent.
And rent is going up. Exactly. And so you're almost double dipping when you're invested in real estate. You're getting a tax loss, but economically, the value, your portfolio, your net worth
It's growing.
is growing.
Absolutely.
And that's why people love real estate. Now, obviously, yeah, there's some difficult things about real estate. Going and trying to fix a toilet at 2 o'clock in the morning is not very fun.
Right. Yeah.
I think I'd like that.
Get a property manager.
Yeah.
So you used to it in my own house.
But the long game with real estate
Is
it's okay, if I'm going to sell this property, I'm going to do a 1031 exchange, which means I don't have to pay tax. I get to defer that tax into my next property, and I keep doing that over and over and over again until you die.
So that should be something that's highlighted for people, is just to look into 1031 exchange.
Yeah,
that is a massive plug.
massive plug.
Don't want to overlook that. 1031 exchange allows you to roll that money untaxed into your next investment property, which is significant. And the way that you should absolutely go about doing it, as opposed to just a whole transaction, pulling out all your money and then going and buying a property.
Yep.
There are smarter ways to do it. A 1031 is a massive plug.
Is there, Paul, and just for the listeners, hopefully they get to a point like this, and hopefully I get to a point like this at some point. How many homes or rental properties can you have in your personal name until you start a business?
Yeah, good question. So a lot of banks, so 10 rental properties,
10, okay.
and then you're starting to get a little bit of pushback from the
Is
banks.
that per state or across the states? Like, say if I had a 2 in Florida, 1 here.
No.
Just 10 in
Across
total.
the nation,
Okay.
10 in total.
Cool.
Yeah. And then you're looking at some alternative funding. You're having to have a better relationship with your bank.
Sure.
It's not that you're capped at 10, but at 10, the bank's saying, all right.
So would you
We're gonna-
recommend though, like you stay at that 10, or would you say like,
No, I'd go for it.
Find
Go for it.
alternative
Yeah,
measures, yeah.
do it, yeah. Find
More-
other finance options. and
More property, yeah.
More the better.
Yeah,
Yeah.
the more the better, man.
Yep.
Very, very interesting stuff. Look, Paul, we're short on time. And let me tell you, my man, you talk tax better than anybody in the world. Hey, if
taxes
you're-
typically
if-
bore me.
taxes
but
are sexy,
I'm
man.
sa-
Talking
I'm
to you, Paul,
saying,
it is
man,
very sexy.
you ain't on
especially
the-
looking at you, dude.
If you ain't on the edge of your seat, I don't know. I don't know who you are, man.
I'm pretty much falling off.
So I'm
man.
amped up, right? I'm ready to go jog a mile.
Yeah.
I'm amped up. Paul, any parting gifts to the listeners, or any words of the wise that you would impart? I gear this conversation a little bit more towards guys that are just breaking into the 1099 independent contractor world. But I will guarantee you, I can't guarantee you, I don't want to throw out stats I haven't researched, but I would argue that probably half of independent contractors right now are not doing it this way, and should take a very, very serious look into it. So any other parting words to our listeners right now in terms of their taxes?
Yeah. Just in general, business in general, a huge piece of business and value is your network. Who do you know? It's not how do you do this, but who do you know that knows how to do it, right? So sometimes something like this can be very overwhelming. Oh my gosh, I'm missing all these pieces. I would say one of the keys to this is to have, and it doesn't have to be with me, to have a relationship with your CPA.
Yeah.
You don't need to go research all the ins and outs of a 1031 exchange or accelerated depreciation for your car or how to do the Augusta rule when you're renting your house out. But if you can have a relationship with someone who does know the ins and outs of that, that is where the real value is, because you can speed up time. I'm not going to go try to like install solar or satellite on my own home.
Right.
I'm going to find someone who's an expert in that. I'm going to save
Totally.
the time.
Totally.
Right?
Yep.
So I would say partner with, create a relationship with someone, with a CPA that, hey, I can roll all this out for you, and you have the peace of mind that, hey, just almost like a checklist. Hey, I'm doing everything possible as a 1099 contractor to reduce my tax liability, and then I sleep good at night knowing that, boom, I'm doing everything I can do, and all my ducks are in a row, versus going about it on your own, trying to figure out everything else.
Yeah, that's really
Dude,
good.
that is so relevant, man, because we were talking about this a little bit before we started. My depth of knowledge on taxes, very, very limited.
Mine's micro.
I would say very, very limited. I rely on a CPA and having a relationship with a CPA to be able to do that.
Do you, and with that being said, do you guys offer like financial advising and stuff like that too, or is it just strictly accounting?
So we've got third parties that we do a lot of our financial advising through. We're strictly payroll, tax, accounting, and everything that has to do with that. We nail. We stay in our lane. Outside of that,
No, that's all. I love that.
we've got relationships. Back to
Yeah,
relationships.
yeah, I love that.
No, it's true.
That's awesome.
Paul, tell our listeners how they get a hold of Welch and Olsen.
Yeah,
Welch Olsen.
good. So welcholsen.com, my Instagram too, Paul Olsen CPA. Love the door-to-door industry. Love working with guys. A big piece of what we do is education.
100%.
I think it's super important that whatever relationship you do have, that you are being educated. And so that's maybe something unique about what we do is, yeah, we're going to implement all these strategies, but I want you to understand why we're doing what we're doing. You don't have to know every little nook and cranny, but being educated, for you to be able to sit on a podcast and talk fluently about tax, and you're not a CPA, you've been educated on that, right? You know what you don't know, at least.
We've been burned.
Hey, but no, you're right.
Your first year.
yeah, you're
First
right.
year we were burned.
But it's so true, and I was actually going to say, every time we talk, I come away more educated. This kind of stuff is super beneficial for me as well, and I know it was massive for the listeners. So, Welch Olsen, get up with these guys. They've been helping dudes like us save money for a long time. And we'll catch y'all next time. Paul, we appreciate your time, brother.
Absolutely.
Donnie,
Thanks so
always
much.
a pleasure, and we'll catch y'all on the flip.